Hey guys, Fabio here, hope you're all doing well. So I decided to make a little video on supply and demand before we dive into the weekend, because I have been receiving a lot of questions about supply and demand and how to draw it in. So yeah, I hope this video helps you guys and yeah, enjoy. And if you have any questions whatsoever, make sure to send me a message on Discord. Link is in the description down below. Okay guys, so to begin with, what is supply and demand? So supply and demand essentially is an advanced concept of support and resistance in my opinion. You can use supply and demand as support and resistance, and essentially what we expect is price to reverse from demand. So demand is always your lower zone, and let me just adjust this to black. So demand is always your lower zone, and we also expect price to reverse from our supply, which is the upper zone. Yeah. So if you just look at simple economics and economic dynamics, what you know is that when the demand is high for a certain product within the market, price of that product is likely to rise, and when there is a lot of supply for a certain product, the price of that product is likely to drop. So with that said, let's dive into these zones. So first of all, before we dive in, I have two ways of drawing these zones. So first of all, what you can do is you can embrace the entire range or base. Second of all, you can find the last imbalance candle before the big move up or down. And then what you do is draw a zone from wick to wick. And important to remember, and this is a key rule, is that the zones are going to be stronger if located at swing highs or swing lows. So let me show you guys what I mean. So as you can see, I have a few zones drawn on my charts over here, and I'm just going to delete this text, excuse me. So as you guys can see, a few zones drawn on this chart. So let's just turn on the 50% body candle indicator for you guys, because those are called imbalance candles, right? So those 50% body candles are the imbalance candles. And if you want to have this indicator as well, just go to indicators and type in 50 and then percent body candle. So what you now want to do is that you want to look first of all for swing highs and swing lows, so extreme points within the market. And the first extreme point within the market I would say is over here, second one is over here. Yeah, so looking at those extreme points in the market, what you'll see is that there are big moves coming from those imbalance candles, right? So up above over here we have an imbalance candle, from there big move in towards the downside. Down below we have the imbalance candles, these two, big move towards the upside. And as you guys can see, remember the rule, what you want to do is you want to draw the zone from wick to wick on that last candle. So looking at this base, looking at this imbalance candle over here, what we can now see is that if we look to the right, price dives into our zone, then reverses up. If we look at that upper zone, once again our swing high zone drawn from wick to wick, and we look all the way to the right, what we can see is that the market comes to our zone and reverses back towards the downside. So these are just simple zones drawn from wick to wick, and as you can see, what you could do is draw the entire basing structure. So this is the entire basing structure, but then only use the last imbalance candle over here and draw it from wick to wick for more precision. Then looking down over here, once again we kind of have this swing low in my opinion over here. And from there we get that big move back up in towards the upside, and as you guys can see, drawn from wick to wick, market dives in, moves up, market dives in, moves back up. Then once again down below over here we have these two imbalance candles, from where we get that large impulse in towards the highs. So this is your basing structure, a rally, a base, a rally zone. And as we can see, once again from this certain doji candle drawn from wick to wick, if we look to the right, market comes into my zone and dives back out of it. So pretty simple, right? So let's head over to some more examples, and let me just delete these other zones for you guys to keep our chart nice and clear. Okay, so now looking once again at the chart, what can we see? Well, first of all, we have this zone over here, clear basing structure down below over here, right? So we have our drop, our base, and our rally zone. Remember, last wick before the big, or the last candle, excuse me, before the big impulse in towards the highs, drawn from wick to wick, looking towards the right, what you can see is that reaction from our zone, big impulse in towards the highs, right? So it doesn't look that major, but if we just measure up the move, this is about 70 pip 70 pip rise on dollar yen. Now looking at our next example, once again we have this basing structure over here. So you could say, okay, well, I'm going to take this entire basing structure as my zone, but then remember guys, take that last imbalance candle, draw it from wick to wick, look towards the right, sniper entries guys, boom, and then boom, back up in towards the highs. And then what do we see, or where do we see rejection from? From that swing high zone, right? So once again, we have the imbalance candle at a swing high, big move in towards the downside from that swing high zone. Boom, market moves back down. So then it came in towards this zone, but then market comes back up in towards that zone. Then once again, big drop back in towards that previous zone. And then again, it's like ping pong guys. Then boom, once again, reversal back up in towards the highs. And as we can see up above over here, this zone got created. So once again, basing structure or an imbalance candle, rise, base, drop. This imbalance candle drawn from wick to wick, market comes back up, market goes back down in towards the zone over here, slightly out of it, but still in towards the zone, and then reverses back up a bit. So as you guys can see, by just using those last, or using that last imbalance candle and drawing the zone from wick to wick, you can really get some nice entries in. So now looking at this structure over here, once again, what you can see is we have the rise, then you have the base, right? So all these imbalance candles are your base, then we have the big drop. So what you want to do is just take that last imbalance candle, draw that from wick to wick, then look towards the right, and what can we see? We can see that we have resistance formed, and once again a big move back down. Delete that zone. Then what can we see over here? Once again, clear rally, clear base, clear drop. Take that last candlestick, draw it from wick to wick, look towards the right, price wicks in towards our zone and makes a drop. Once again, boom to boom, move of 50 pips. Then looking at this zone over here, this is our rally base rally zone. So rally, a base rally zone, draw it from wick to wick, market moves out. So big impulse, market moves back in towards the zone, market moves back out again for a move of approximately 75 pips. So the main focus of doing this is really spotting those important candles from where big impulses occur. Because for a big impulse to occur within the market, you need consolidation, and consolidation can also be interpreted as base forming, and base forming leads to supply and demand zones. And in order to effectively use these zones and not have major or massive zones, what you can then just do is take the last imbalance candle, so the last 50% body candle, and use that as your supply or demand level, wait for price to come back up, and then look for further downside from that specific pair. So it's not that hard guys. Pretty much just really essential to spot big impulses coming from bases within the market. So for instance, what you'll see is that this is a beautiful zone, or this was a beautiful zone. And you really just use these zones to your advantage, because they can really change the way that you look at the markets, and they can really improve your trading as a whole. So let me just spot one more zone with you guys. So for instance, over here, once again, from wick to wick, as you can see, big impulse from this 50% body candle. So we have kind of like a rally, a base, then a rally, and then market comes back down in towards the zone, and then moves back up. Over here, once again, draw it from wick to wick, the 50% body candle. Market comes back into our zone, market moves back out, comes back down in towards the lower zone, then starts moving back out again. So simple as that, guys. Once again, over here, we have base forming, draw it on the last candlestick over here. So what you can see is this is like your base forming over here. Before the big move out, market moves back in towards our zone, then we look for longs. So a lot of people would have been going long if you would draw your fib from here to here. Then you have like your 618 over here. People go long from the 618, but market then comes back down. They become bearish, for instance. But if you know how to read the market, you'll know that there is still demand situated over here. And then the market starts reversing back up higher from that level. One more example that I'll just show you guys is over here, for instance. Base forming, big move out of that zone. Market comes back down in towards the zone, grabs liquidity, moves back out again. That would have been an easy 60 pips. So that is that for today, guys. I hope you guys kind of understand what I'm trying to explain within this video. If you still have questions, please let me know. Hope you guys enjoy, and I wish you all a fantastic weekend. Thanks, guys.